Good day, subscribers. Thank you so much for joining me. Today, I am Jeremy, and this is the Financial Education Channel. And today, we're talking about a stock that my dad told me about a long time ago that's gone up 2,000% in the past 7 years. You heard that right. 2,000% gain in 7 years. So we're going to go ahead and look back at this, guys. If you enjoy this video today, go ahead and hit that thumbs up button. Let's get into this. So we're going to go way back in the day to 2009 when little Jeremy was learning about investing and just starting to dip his toes into investing and starting to buy companies and whatnot. My father actually knew this because I had all these annual reports being sent to me. This was back when annual reports actually got sent to you and you didn't just look at them online. So I was learning about investing. I was very interested. I was starting to invest a bit. And my dad, he actually came to me with this stock and he was online and he showed me, he's like, this stock looks so great. You know, I believe in this company so much. It was called Middleby. This stock has gone up 2,000% since he told me. Look at this chart here, guys. Back when he was telling me about this was in 2009, early 2009, when I was first starting to learn about investing. It was at $7 a share. $7, you know, $7-8 a share pretty much that entire year, around that range. That's when he was telling me about it. And I actually looked into it later in the year, more toward a little early 2010, and I was like, I'm not that interested in it. Look where it's at now, $140 a share. So it's gone up 2,000% in just 7 years. 7 years, 2,000%. So what is Middleby? What is this company all about? Well, I really, he told me about it that day, but I really looked into it in depth and it was about right after, 2010 had started, and the 2009 annual report came out that recapped the 2009 year. Middleby Corporation is a global leader in food service equipment industry. The company develops, manufactures, markets, and services a broad line of equipment used for cooking and food preparation in commercial restaurants, institutional kitchens, and food processing operations throughout the world. So basically, they got the majority of their revenue from selling equipment to restaurants that either needed to upgrade equipment, wanted to upgrade equipment, or for new restaurants who needed equipment, things like that. They also sold food equipment to hospitals, things like that. That is where they got the lion's share of their income from. So let's see what he saw in this company. So he saw a company that had grown, that had doubled revenue in just a short 5 years. From 2005, if you look all the way on the right-hand side there, they did $316 million in net sales. 2009, they did $646. Net gross profit in 2005, they did $121 million. Gross profit in 2009, they did over $250 million. So once again, they doubled gross profit. Now, the most impressive thing about this is not actually that growth. The most impressive thing is the results they got in that year 2009. 2009, if you guys remember correctly, that was the worst recession of my life. It was a great recession. It's the worst recession that's ever happened during the course of my life. I'm only 27 years old, but that was by far the worst. Companies were looking to hold back money. Companies only wanted to spend money if they absolutely had to. And new restaurant openings came to a very, very much a stall unless it was a super growing brand. Companies just pulled back because it was a bad recession. They didn't want to keep building at that time. They needed to preserve capital because everybody's profits were down. Everybody's revenue was down. They needed to preserve capital. Well, Middleby, look at this company. They still did phenomenal net sales, and the gross profit to still come in and be profitable is amazing. And actually, they beat their gross profit in 2008, which is absolutely amazing to me. Absolutely amazing. When you can be profitable and extremely profitable as they were, actually a record year as far as gross profit goes, when you can do that in the middle of a recession, a horrible recession, that means you are running your business very, very, very well. You are running your business very well if you can manage to put up the best results you've ever have in a great recession like that. Absolutely amazing. So that's what he saw in the company. He knew that, sales would even get much stronger as we came out of that recession. Sure enough, they had. So This is how the company kind of described the company a little bit, or excuse me, the management described the company. This is a CEO talking. 2010 and beyond. Working in our favor is the fact that eating outside the home will continue regardless of the economy. The economy was a talk of back then. Emerging markets are in the infancy in terms of restaurant openings, and Middleby is well positioned with our international sales structure. We have a unique business model that is extremely difficult to imitate. While the environment remains challenging, we have made it a priority to stay close to our customers and maintain our culture of product innovation. To further penetrate the market, we expanded both our domestic and international sales teams. During a time when companies are cutting, we are also investing in R&D and have maintained a robust pipeline of new products. These investments will pay dividends in the future, and oh my gosh, have they paid dividends in the future, as I'm going to take you guys through here in just a minute on what their sales are nowadays, what their gross profit is nowadays, and you will see why this stock has gone up so massively as it has over the past 7 years. Absolutely phenomenal stuff. So let's look at the results now. Last year, they did $1.8 billion in net sales and $706 million in gross profit. And this compares, guys, to in 2009, they were doing $646 million in net sales and $250 million in gross profit. So they have absolutely knocked the ball out of the park here, guys. Net sales, gross profit has just grown at amazing rates over the last 7 years. And this is why the stock has gone up 2,000%, guys. We can see very clearly here that this is a well-run company, and they are just a growing beast. And part of what Middleby does, honestly, they acquire a lot of companies. They acquire a lot of restaurant, food equipment manufacturers. They bring those in and creates less competition for them. And then they can actually make those companies more profitable because they can source parts easier. They can, they have much more leverage to, get steel for a certain price or get this product for a certain price, all those kinds of things. And they can actually raise the price they're selling to their customers because they have less competition. Once you have less competition in the market, you can actually raise prices on the other customers because you don't have this person fighting because now you own this person. So that is another great way Middleby has grown into the giant beast it is today. Let's look at these most current results here for the quarter they just reported about a month ago. Net sales increased 27.9% compared to the prior year third quarter. Absolutely amazing. Then we go down here a bit. Now we look at gross profit in the third quarter increased to $231.7 million from $177.2 million, reflecting the impact of increased sales from acquisitions like we just talked about. The gross margin rate increased to 40.4% from 39.9%. Improved margins reflect efficiency gains, including benefits from integration initiatives. Guys, this is exactly what we were just talking about. The acquisition strategy behind them is genius. Buy out a company, then you have less competition in the market, and then you have more scale that you can go ahead and throw behind that company. You can get parts and all these things for a lot cheaper. You can cut down on sales people because now you only need one person selling two different products versus two people selling one product. This is how this company has grown into a giant beast and has just continued to deliver great growth year over year. It's really through acquisitions, guys. It really is. Now, if you're wondering, is this still a good investment nowadays? Let's go ahead and just look at the Middleby stock right now. So right now it's at $140.97. That is right near its 52-week high. So its 52-week low was $79.11. $141.29 is 52-week high, so it's right at that 52-week high. And they have a PE ratio of just under 32, a market cap of $8 billion. So if I was looking at this company, I would probably say, it's not for me because the PE is so high, it's near the 52-week high, all these kinds of things. But this is the same thing I said in 2009 when I was like, oh, I don't want to be investing in it because it had a high PE even back then. And it had so I'm just like, it's the same issue I had back then with Middleby, which is why I still probably won't invest in it. But despite me not investing in it, it's just been a beast. So this proves to you guys, not all companies are for everybody, but I wish I would have listened to him and invest in this one because 2,000% in 7 years is absolutely ridiculous, guys. I really hope you enjoyed this story today, hearing about my dad's phenomenal stock pick that has just been a beast over the last 7 years. And if you're watching this video today and you have not subscribed yet, you may want to. I talk about personal finance on the channel, talk about entrepreneurship. I'm an entrepreneur, and we also talk the stock market the most on this channel. Thank you for watching, guys, and have a great day.